Welcome to Fomo Consulting for your daily AMC stock analysis video on Monday, August 2nd. Ladies and gentlemen, it is a new month, but the same old story, right? And as always, the apes are winning, diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative, entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel. Let's get into the video. Thank you to each and every one of you who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you very much. We'll start with a quote. You can't do big things if you are distracted by small things. A lot of little distractions throughout the community these days. Obviously, YouTubers looking to expand their horizons, which is perfectly fine. No issues there, but it certainly caused a lot of chatter. Maybe a little bit of indecisiveness, a little bit of FUD, what have you. Certainly opportunistic for people looking to bash AMC, the apes, the diamond hands, retail investor. Overall, it's just merely a distraction from the overall play, the overall goal for most of us. So yet again, another reminder, earnings report next Monday, August 9th, after hours, 5 p.m. Eastern. Could be a major catalyst for AMC. And Zacks is expecting a pretty big jump in revenues and also have adjusted their EPS earnings for a loss of 91 cents per share, which is actually very good. Hopefully AMC can beat both EPS estimates and revenue. And this is a good way to start. Overall, box office did quite well this past weekend with Jungle Cruise bringing in 34.2 million domestically on its open, and Disney also cleared 30 million. The Scarlett Johansson litigation that's ongoing with Disney may very well change how movies are, I guess, premiered going forward. Who knows? We'll see, but it could be again a fundamental catalyst for AMC and the box office as a whole. So the broader market overall, last night, early this morning, all of the futures data, the Russell, all the major indices all showed what appeared to be a positive Monday. We certainly got off to a fantastic start. AMC, the Russell, IWM, SP Dow, and NASDAQ all really jumped right off the opening bell. And then reality set in. Around mid-late morning, we started to have heavy selling pressure, as you can see by the charts at the top. But overall, it could have been far worse. But AMC felt a major effect of this really in the last 2/3 of the trading day. S&P closed down 8 points, Dow down 97, and NASDAQ up 8, and Russell was down 11. The Russell was actually up 30-40 points earlier this morning. Again, it was a major prop for AMC, but as it began to sell off, IWM sold off, and AMC also got pulled down, as well as many other of the small cap stocks. Overall, big tech, as you can see, pretty much traded sideways towards the end of the day. Tesla was on a fantastic run this morning. That kind of got pulled back as well, but overall, red day generally, but could have been far worse. But certainly, the broader market, as you see, has a major effect on AMC. So far, with the volatility, there has been 59% of S&P 500 companies that have reporting their second quarter results. Astoundingly, 88% of these companies have beat the Wall Street EPS earnings estimates, which is incredible, and the expected earnings growth rate for S&P 500 companies tracking towards 85.1, which would be the biggest jump since the fourth quarter of 2009. So, the overall market is ripe for a pullback at some point, but obviously not at this very moment. Speaking of pullbacks, crypto having a slight bit of one. Overall down on the big names. Bitcoin down just a bit. Doge. Ethereum's actually up. Litecoin down. Nothing too terribly crazy, but Bitcoin's holding quite well. and Doges as well around that 20 cent mark. Bitcoin was up around what $41,000 over the weekend. It came down just a little bit, but it's actually holding up quite well. So options this week, as you can see, we are currently right around that 35, 36 strike level. You can certainly see the accumulated volume on the put side, and then you see on the call side right above where we currently are. You've got decent volume, but nothing too terribly crazy on the options. I'm surprised there aren't more options being in play with AMC right now. The IV has come down quite substantially, making it more attractive. But I think just in this consolidation period that we've been in, it's hard to tell which way this stock's going to go currently. So IWM, ETF directly associated with AMC. You can certainly see where it ran up at the opening bell and then pretty much sold off pretty much for the better part of the day. We tried to find support in the middle of the afternoon and then yet another sell-off, as you can see, and that pulled AMC down right along with. So let's look at the AMC chart today. Overall, you can see where we jumped at the opening bell. I thought it was going to be a fantastic day. I'm sure you did as well. Future or pre-market looked really good. The Russell 2000 futures look good. Everything pointed towards a really strong Monday, but not to be had because obviously there were concerns around bond yields and COVID, you name it. There's always a concern. Pulled down the broader market, and we went right along with it. We closed at 35.20, down $1.83, or basically 5%, up a bit after hours. We did find that support around that 36, held it for the better part of the day, but really the last power hour, we kind of bled down below that 36 level and got pulled down pretty low. So overall, as you can see, the Russell 2000 chart below, we followed it nearly identically throughout the day. Again, as it goes, we go. If there's not a lot of extraordinary selling pressure or buying pressure either way, with us buying and holding this stock, especially on lower volume, is pretty much apt to follow the broader market. So let's look at the last 5 trading days. As you can see, again, lots of heavy selling pressure. The Russell, again, has been pretty much selling off. We needed to find a bottom. We need some recovery in the Russell to help prop us up. But as it sells off, we go along with it, it would appear. So looking at the 1 hour chart over a broad spectrum of time, you can certainly see where that $35, $36 level has been a major level of support. We need to hold it. 37 was holding strong over the last week or two, but we've now broke through that. 35 is pretty much our next level, and then I believe 31. We really need to hold this where we're at, ladies and gentlemen. We are very, very low on the RSI. We're definitely oversold down around the 30 level, and the MACD, again, can do a bullish crossover at any time, but we're very similar to GME at this point where we have very low volume and lack of a catalyst, and we're poised to move with the broader market, specifically the Russell 2000. So as you can see here on the 2 hour chart, again, that $35 level, we've bounced on that many, many times over the past month or so. We need to hold it. If we do not hold it, I could see this going into the low 30s quite quickly. Hopefully we can bounce again. The RSI is definitely oversold, and the MACD again is in bearish territory, but poised for a bullish crossover at some point soon. We just need a buying catalyst. So right now on the daily chart, you can see the alligator's mouth is just chilling, maybe a slight bit of bearishness. The MACD, as you can see at the bottom, we did touch the signal line. I was hoping for a crossover. We bounced, and now we're kind of just sideways. Hopefully, after today's heavy selling pressure, hopefully we can turn that around tomorrow. The broader market will cooperate, but we are just in very low volume these days. Need that catalyst. Earnings could very well create that catalyst. RSI again is low on the bear side, but poised for a big run when we get it. And again, that little pennant we've had, we actually broke below that today. We broke below it on really lower volume. So it's not really, in my opinion, a true convicted breakdown on lower volume. I believe that it will show itself when we have more volume over the next day or two, hopefully, to see if it's actually going to continue downward or if we're actually going to have a break upwards. We shall see. GME, just like AMC, had a good morning going, and then the sell-off happened throughout the broader market, and GME felt the effects of that again on lower volume, lack of a major catalyst. We're just kind of along for the ride to the broader market. So looking at the fundamentals of the short interest, 38.61 days is the current Vortex data for the short position average age. This has been hovering and bouncing around the upper 30s for a week or so now. Fundamentally, nothing has changed there. Overall, the short interest has gone down just a bit today, but overall still heavily short. So looking at the Vortex data, we currently have 438 total institutional investors. That is a reduction of 4 since Friday, at least reported. 396 are long only, which is still quite substantial. 15 short only. Shares on loan has come down just a bit to 98.45. Cost to borrow hovering around that 1.4% range. Utilization is actually a very good place of 91.17. I believe once we get above 95, hopefully that will put a lot more pressure. The cost of borrow rates will go up. Short interest today, 14.23, down 5.69%. Borrowed shares. So if you were going to borrow shares and short a stock, today would have been the day, right? But overall, a lot of what happened today, again, was broader market. It was not related to heavy shorting. They did return, again, T2 settlement, 5.91 million shares. And we did have lower volume at 58 million. So as you can see, volumes again on the options chain were low compared to our recent self. We're right around 454,000. We've been hovering around that 500,000 range now for over a week. So volumes have come down on the options, but we are still very bullish at 2 to 1. Again, on the largest trades you see today, there were $50 strikes on the top two, and then a $37 call, $30 put, that sort of thing. So overall, the overall volume has calmed down, but the sentiment is still bullish. So let's close with a quote. A distracted existence leads us to no goal. Again, a lot of distraction lately in the YouTube community and the social media platforms. At the end of the day, do your own due diligence. I'm certainly not a financial advisor. This is not financial advice. Use your charts, do your research, make your own decisions, what's best for you and your family. That is all I can tell you. So I hope you found this video informative, entertaining. If you did, please like, share, certainly comment, and most importantly, subscribe. As always, I want to thank you all for watching, and I hope your life is full of green candles. Take care. I'll talk to you soon.